Christina Partzeneville is covering the IPO for us at 1:15 p.m. open. And Christina, did it hold the IPO price?
Yeah, $39 a share. That was the opening price. Just moments ago, they were clapping. So again, we were expecting initially this morning, the offering price was $40. So it's a little bit lower, also lower than the range that they were hoping for, between $47 and $55. You can see the share is quite volatile right now. Only about 8% of the float is available to public markets. Overall, the goal is with this price, it would be about raising $1.5 billion for this company, which was just founded back in 2017. So pretty incredible that they're going to market with only 8% of the float, raising $1.5 billion for a total valuation of anywhere between roughly $23 billion to just a little bit more than that. But you can see all of the staff members are behind me, the three co-founders as well. And this is really just a test, not only for the success of maybe a growth tech IPO and the launch today, but also just a sentiment check on where we are with IPOs as a whole, especially for the NASDAQ when they have several more lined up in the coming months.
Christina, it's a barometer, but it's also kind of a strange animal in and of itself. What does it tell you, the way that sentiment's turned a little bit sour against them in the last few days? Do you think that's more as people have learned more about the balance sheet or the structure of the company, or because the markets continue to kind of move against them?
Yeah, I can answer that in two ways. If you take the largest institutional investor, which is Magnetar Capital, they were on CNBC earlier today, and they said that they've never seen growth like this before. However, they're putting up a lot of capital. They've been in the market for about 20 years or so we can take them for their word. The other side of it is, to your point, the concerns of the debt levels, and many people weighing in that this company made $2 billion last year but lost $863 million. They have a lot of debt due in the next 2 years. Their hardware assets, GPUs, are depreciating quite quickly, anywhere between, they're saying 6 years, but realistically, if you listen to Jensen Huang, the CEO of NVIDIA, it could be anywhere between 1 and 2 years until the next greatest iteration comes out. And then what does that do for the billions and billions of dollars that this company has spent on previous generations of GPUs? So those are all factors to consider. This is not an asset-light company. They have to build. They got great contracts from Microsoft, NVIDIA, OpenAI, IBM, et cetera, and they're working on that customer diversification. But there's a lot of assets building that needs to go into this company, and that means debt.